Hello guys, glad to have you on board again today. Real quick update, there will be the weekly briefing but released slightly later due to some weather conditions in my city. There's way too windy conditions, so lots of background noise. You might hear a little bit of it into this record, so don't mind it, but I want to have clear sound for the weekly updates. Okay, that aside, we also have to talk about the current market situation. A bit of a volatility move yesterday, and of course it always make people talk about it because, well, that's how it is. Sentiment market. So this is the reason why I want to debunk all of it today. We're going to talk a lot about the misconceptions that the market is currently diving straight into, and I'm going to save that for the weekly updates. So despite that, what really worries me is the fact that we're back into extreme fear, which is definitely not logical at that point of time. So we're going to closely monitor this within the next few days, but I think yesterday we've gone to an inflection point. Very likely might have built a bottom or looking forward to it. There is this huge dichotomy between the two. As you can see, the global S&P sentiment, even though it's underlyingly decreasing, meaning that I still stand for what I said, we haven't seen the dip in the S&P 500 and the Nasdaq, so more pain to come. For multiple reasons, everything suggests that the retailers are getting to buy too quickly. So I don't necessarily expect a bloodbath, but I don't think the bottom is in. At least don't expect any breakout of resistance in the stock market anytime soon. That doesn't mean that stocks themselves will not rebound. As we always made it real clear for several months, the structure underlying the assets in the major indices in Wall Street are fake. Which means what you look at when you look at indices is just a bunch of assets that never, ever consolidated. The rest of the market has been entirely wrecked, and most stocks have lost 60% of their all-time highs, just like cryptos. And these will literally rebound because they've been oversold, and some of them still provide growth down the road. So don't really make a whole lot of conclusions because the market is just blurring each and every line that you might perceive. So once again, huge dichotomy, and like I said, the underlying structure still shows some improvements down the road for crypto and deteriorations for the stock market. So I still plead for that decorrelation to actually start occurring, even though the correlation status might not change, but we're going to talk about that later today. Okay, in the meantime, though I strictly want to talk about the fact that these extreme sentiments might be really overrated, and most importantly, I hope you guys don't trade because of this very bearish environment, because I need to set this thing real clear once again. I'm taking Ethereum as a representative in here because, of course, that's one of this biggest market cap and so on, but still, oh boy, if you can convince yourself that these things are going to go bearish because, oh man, look at that, it happened in the past and so on, okay? So there's no such a thing as a certainty. I certainly cannot say 100% chance that this thing is never going to go down. There's still a slight possibility for this to happen, but you need to understand that this and this are two totally different market structure, and that's making the assessments of that may repeat, and I might have bought this thing really expensive, and if it goes there, I'm going to be ruined. Well, okay, once again, chances for that to happen very limited. So limited that you rather like to gamble on the lottery and you will have better chances to succeed. So really understand that this is really not that probable. Most importantly, this is not a bubble, this is a trend. This was a bubble, and all of this was absolute fake pricing, and it of course took years to deteriorate it, okay? So the same question surrounds today. Maybe we might have bought the wrong horses. I don't know. Like I said, we will have to adapt. Not everyone will succeed, but still, boy, you have to understand that these things that have trends, even if they have to fail, they have to build third range boundaries. So until you see a third range boundary on these assets being bearishly rejected, there is no bear trend, period, okay? The statistical probability of this to happen are so negligible that you'd rather like to gamble in the lottery instead. though I'm not going to say it over and over again. But the thing that I wanted to talk about is most importantly understanding where the risk limitation is. So just stating once again that we have weekly bullish trends going on and possibly monthly ones as well. So I'm not even mentioning these, just going to the market reference time frame of what's going on now. The range we have is in the daily chart, okay? Here we're ranging, we can see the moving average is settling in between the context, preceded by bullish trend, so same thing goes here. What matters is where is the third fucking range boundary. That's the only thing we care about. So we're going to derive back in time and study the range boundaries. So we come from the support context, after resistance, support, and that, okay? That's purely and simply this. The market top would be there, but we failed to actually install value. We just tried it and failed. So here is where the third range boundary is. Is it any bearish? There's no such a thing. There's just profit taking and some professionals that have been wrong-footing the market just because they wanted to buy cheap. So it's really that. The entire bearish market that we've experienced in here, I've sounded the alarm day after day to tell that there was no bear market, because otherwise we would see increasing supply, and we've seen exactly the opposite, supply being drained off of exchanges. So this is just yet another type of manipulating the market, pushing prices down to let the weak hands sell, and of course the strong hands bought it out and took it off the exchanges. It's just, I mean, incredibly stupid to see that it still works, but of course, I mean, this always has been the case. And well, smart money shakes the weak hands and they end up taking it. So that's really what's probably have happened once again. So this is our range, okay, with a positive higher high point of a third range boundary. How the fuck can you want to build a bearish market out of it? And most importantly, the fourth range boundary currently sitting at this price with very nice risk limitation for the bulls to get in, okay? Volatility patterns. Okay, so the bulls really took over control in here. It's really significant. That doesn't mean it's 100% chance, but it's very, very significant. So we've got goddamn higher low points and higher high points. Call that a bear market. Good luck. Okay, so until then, our big range is now mature because it has 4+ boundaries, which means if you ever try to make sense of whatever the hell is going to happen until then good luck once again. The next targeted interesting tradable areas are 2500 or 4100. Okay, so we're going to get to these areas. So where are we now? Right in between. Let me just hide that thing so you see between it, through it. We're really in the median area, trading at the median prices, okay? And remember, bullish trends, so bullish trends tend to break to the upside. We generally build ranges and break these ranges in the side of the preceding trends. So, well, and not to mention the trends on the higher time frame. So there is very statistically significant chances to break above this level. But until then, well, this is our dumb zone level, and we are trading in between, and we are really sitting in between at the most average traded price we could get. So, well, uncertainty is definitely at its best in here. And what I would say is that this area, no matter whatever happened in here yesterday or the days before, is non-interesting at all. This is where volatility can play its game, because this is where we have the highest level of uncertainty. But like I said, uncertainty of whatever's going to happen in the short run, but in the midterm, it's definitely way more statistical outcomes to the upside than it is to the downside. And if we ever were to trade at $2,500 again, I'll be there to buy once again. Though I will probably not do it because I already bought and I haven't profit taken on Ethereum. But if I did profit take the other day, which I did on some other projects, if I decided to do it on ETH, I would definitely be ready to buy again if we were going down there. Until then, well, I risk manage, because I certainly don't think the market is going to 1500. In the opposite direction, I definitely think that if we ever go to 4100, there is very limited chances for the market to reject out there. There is far more significant chances to succeed installing value. That doesn't mean that prices will not shitly go volatile out of this area, and I very well bet that it will be. So this will be another volatile area, but anyhow and anyway, value is far more significantly tainted to succeed to the upside. You have to understand that. Most importantly, why do I mention that? Because you already know all of this. Is because we've mentioned one important thing. We're into the most indecisive area in which those who will target this have pretty much equal sized chances in terms of price movement than the ones who bet on the opposite direction. So this is where basically people will gamble on, we're going to go there, or we're going to go there, or eventually we're going to go there before going there, or we're going to do this and this, and okay, fuck. Not interesting at all. This is for market makers to jiggle with derivative market contracts and all of these things. So let them play these games. Until then, the only thing that we can say is that the sentiment is over bearish, and the momentum has gone from severely overbought, which is a normal condition for a bull trend. Bull trends overbought, as you can see in here, and this is absolutely normal. Okay, but in here we've gone from overbought condition straight down to oversold condition, minus 100. And you're rarely going to see these things in history. It happens there, happens there, and happens there. And anytime we've seen this has been a shakeout in the momentum. Look at this. Huge shakeout coming out of the Wyckoff accumulations that we've seen. So that was absolutely normal to get a crazy bullish momentum because we were reactivating long-term bullish trends. Here is where we had the big shakeout. Too many bulls, so we fucked it all out. But still, as you can see, even though we've tried to withdraw the market sentiment, it still kept pushing. So I think we're definitely in the same stage today. So here is where we tried to recover from the massive low point where the bulls took over again, and a strong bullish move in here. So the bullish reaction here was absolutely undisputable. But now we see the bearish reaction like, hey, come on, boys. You really thought that was going to be that easy? Well, no, it's not. So we're dealing with average prices. We broke it out of a triangle, which the usual tech guys will say, we break these triangles into the side in which we got in. So in here, they've gone absolutely wrong. We've broken it to the upside. Signs that something might be happening in the higher time frames, for example. But the thing is that we're just pullbacking onto this level. If we were to drive the trend line, we're really at the pullback now. So this, is it really significant of a rising concern of things like that? No, we're just gone to shake out the traders. And to be real clear about what really was all about, well, just add an indicator about volatility. For example, use Bollinger Bands, derivations of the moving averages, and oh boy, where are we? We've just shaken out the dumb hands, going from one volatility boundary straight out to the other one by an absolutely stupidly wrecked momentum in which we break everyone in between. Everyone who was trying to be too supportive on the market has just been shaken out, and now some people convince themselves to sell, or whatever reason that is. But let me be real clear, I bought yesterday, period. I think I'm buying this because for many reasons, the only thing that I see in here in terms of volatility readings and value, okay, is that we're trading off pretty uninteresting prices. But for speculative trades, volatility trades, I definitely had a pattern the other day. So I bought it, period, okay? And what do we have? Well, look at that. These are our current bottoms and tops. Well, higher high points and higher low points. Call that a bear market. Good luck with that. So yeah, of course, some people now try to convince themselves that this means that we failed this bottom and we're going to have to go lower. Eventually 1500 will be the next tradable area. Well, I agree with them. They might be right, but the probability of this to happen is so narrow that I'd rather like to bet against them. So yes, I bought yesterday. Might be wrong. I'm going to take a stop loss if it happens. This is speculative margin trading. But until then, well, I think they're wrong. So I'm going to trade against them. I think we'll have far more reasonable chances to go 4,100 now. Are we going to succeed out there? I goddamn don't know, but that's the bet I'm taking. Okay? So, of course, this is volatility trade, so don't ever try to copy that trade. I, of course, totally on purpose didn't give you any stop loss area or position sizing or whatever that is, so you don't copy, okay? Meaning I've bought doesn't mean you have to, because you don't know how I bought, what I'm targeting, and where did I put my stop loss and all of these things, okay? So don't blindly buy for whatever reasons. Do your own trades, do your own research. What I'm saying in here is that if you're selling today because, well, you think the bear market is going to ring to that door or whatever, well, let me tell you something. I'm on the opposite side of that trade, and we'll see who is right and who is wrong afterwards. This is not about it. Trading is not about being right or wrong. I'm just saying very dangerous if you start to fall down the cracks of sentiment and price manipulation through volatility. Okay, so this is a market maker's gamble. Let them gamble. Don't trade these areas unless you're suited enough to go for volatility trades, and if you know how to handle them, which most of you guys don't know how to. So it's very, very, very important that you understand that letting it play is what matters the most. Your next technical areas are either we go there and I'm going to definitely take a stop loss, or we go there and I'm going to take a nice gain. How do I risk manage these probabilities in between? I don't want to share that, otherwise you're going to copy. Bye guys.